Hello, everybody. This is the Hyperwave channel, and with me again today is Socrates. We've been bringing these to you almost every day at around the 4 o'clock time as the markets close. One of the things that Socrates pointed out to me is we hadn't been talking Hyperwave on our Hyperwave channels for some time. We've been talking about the Bitcoin Hyperwave, and we pointed out others in some commodities, and we've taken a quick look at things like the Turkish Lira, but we thought we would just basically spend time on some active hyperwaves today. There's a bunch of confusion for very good reason about some of them. And at the same time, we're talking, as we said yesterday, about setting up a schedule, and one of those days will be hyperwaves for sure, where one day a week that day will be talking about active hyperwaves. Obviously, we'll do one where all the talk is about cryptocurrencies and Bitcoin and a number of other subjects, and we're still working on that. But today, hyperwaves, and of course, we'll take a look at Bitcoin because we are getting some action in that since our last broadcast yesterday. With that, I'll turn it over to Socrates to say hello.
Hello, everyone. It's great to see you all. We were not planning on doing a show today. Thought that Tyler was going to be on his way in a long 10-hour road trip heading up to the Northwest. And as it turns out, that is postponed until this weekend. So we're able to come to you today with our regularly scheduled show. And as mentioned, we will be taking a look at a couple active hyperwaves to determine what sort of signals we're seeing and what we are expecting in the price action moving forward. So I appreciate you having me on, Tyler, and I'm glad that we could make today's show happen.
Great. Why don't you get started? I know you want to take a look at Boeing. We've got a lot of people that have been watching the Boeing action, and there's some other ones we'll take a look at, but why don't you go ahead and pull that up?
Will do. Sharing my screen now, making sure everything is good. 1 second, checking over here. Okay, I think we all look good. All right.
That looks great.
So first thing we are looking at here is the Boeing chart, and this is very interesting to me for a number of reasons, for both technical and fundamental perspective. I am interested in what's going on here. So first, we see an enormous phase 2 where multiple times a phase 3 tried to establish. Each time, price broke down what would have been the newly established phase 3 trend line, and then it returned to the old phase 2 where it found support each and every single time. So this is fairly rare to see, and to have phase 3 establish itself, break down, and then have phase 2 hold and lead to another phase 3. That's pretty rare, and it's especially rare seeing that happen not once, not twice, but 3 different times. So that leads to an enormous phase 2. And actually a pretty small phase 3, since it is basically being in relation to what was essentially a phase 3 that was within phase 2. So that might sound kind of complicated, but essentially, since this did take off at a higher angle, this returned more than you'd expect in just a normal phase 2. A normal phase 2, we'd expect the price to stick pretty close to this angle trend line. We wouldn't expect it to take off at a higher angle multiple times. When that happens, you're going to get more appreciation than you would expect for a phase 2. So the phase 3 then doesn't increase too much over the phase 2 all-time high. That's kind of to be expected based on this action that happened back in here. Now, the phase 4 is anything but normal, or anything but what you you would expect. It has just been a massive move that has lasted. It started back here in the beginning of 2017, end of 2016, going on almost a 2-year move here, actually over 2-year move in a phase 4 at this very pronounced and steep angle. Phase 4s, they shoot off at a very pronounced and steep angle, but that's such a tremendous rate of return that it's very hard to sustain for more than a few months, maybe a year. So seeing the price going at this angle for such a long time is extremely interesting to me and is definitely outside of the norm. We really would not expect to see this hold up for so long. Now let's zoom in a little bit and notice how we're drawing it here. Not a perfect apex, but darn close. And it catches these this correction here with this one here. A very minor correction, very steep angle that supports the price up in here and up in here. So that is something that I've been keeping a close eye on for a couple reasons. First of all, a retest of this phase line could be a potential buy signal. Hyperwave Theory states that you should be entering in at phase 3 on phase 3 retests. However, entering on phase 4 isn't necessarily out of the realm of reason, and getting a retest of a trend line is always something that I'm keeping an eye on, and generally how I time my entries into trend line retests opposed to just buying right here when it's very much in danger of breaking down. I like to wait for further confirmation, and I like what I really like is the Bill Williams fractal. Those work really well in combination with trend lines. When I get a fractal here, and those are awful small, let me blow that up a little bit for you. Let's go with a 10. Okay, so when we get a fractal that is near the trend line, like we see here, or here, could consider it here, but that didn't test the trend line, so that is different than what we're looking at, more similar right here. So when we see a fractal coming off of a trend line test, to me, that is a very good opportunity to enter, because this can be used as a high probability stop loss, and that generally provides a very favorable risk reward. So right here, this happened. We test the trend line, we get a fractal, and then we would have entered. It would have been right around here is when the fractal printed. Back in here is similar. We test the trend line, and then here's where the fractal prints. We break through all-time highs, and we have this fractal to use as a stop loss. And just for everybody who's unaware, the fractal is a 5-candle pattern. You need a low that's in between higher low, higher low, higher low, higher low. That's why this wouldn't print until here, because we needed 2 higher lows above this for this to be a qualified fractal. So once this closed, this fractal would have printed, and that would have been a very interesting spot to consider entering using this as a stop loss. So what are we looking at here? Like I said, we had a fractal recently, but it didn't test the trend line, just like we saw here. So what I've been looking for is a trend line retest followed by a down fractal. And we are starting to see that develop potentially, in the sense that this is the 4th candle of the pattern this week. So we've got this low here, higher low here, higher low here. So those 3 candles are closed and are good. And now we've got another higher low here, hasn't closed yet. And even when it does, we will still need another candle for this to get a fractal. But if all of that does happen, this candle stays above here and the next candle stays above there, then a Williams fractal will print, and that would be a very interesting opportunity to long. On the other hand, the phase line breaking down would present a very interesting shorting opportunity or selling opportunity if you're already long this stock. If this if we do get a weekly close below this trend line, then the upside of this hyperwave is done. Then phase 4 is violated, and we would expect phase 5, 6, and 7 to follow. And since this phase 4 is abnormally long and has a huge amplitude, that tells me that there's a lot of room to fall once this thing does break down. So in terms of going long, it's interesting because you're betting with the trend and you're in a massive phase 4 with huge momentum, that if you do get a signal that you like in order to long off of this phase line, that is certainly very interested, but I'm mostly interested in the short due to how far this thing has moved. Just in the last 10 years, this thing was down at 30 bucks. And now it's gotten all the way up to well over 400, currently sitting slightly below 350. That's in 10 years. That's absurd. When I see that type of return, everything in my body is screaming at me that this is unsustainable and that a huge correction is on the horizon. And that is where I want to be paying very, very close attention for signals that are reversal signals and potential areas to go ahead and sell. And that's where I love going ahead and entering a alert on the trend line by clicking the trend line, clicking the alert button, and then extending the expiration date and saying close. So now if this thing closes below the trend line on a weekly basis, then I'm going to get a text message, I'm going to get an email, I'm going to get a sound. Everything is going to tell me that this thing, that just happened. And I'm going to be very ready and prepared to go ahead and enter short exposure if that is what I see fit. If it comes too far down and really I miss out, then I may have to wait. That could be the risk of waiting for a weekly close. And this is also some fundamentals that I find very interesting. Everybody knows about the plane crash that happened in here. That was a tragedy, and that's what caused this to gap down on a big way. Seeing that sort of fundamental event not be enough to take out this phase line. I thought that when that happened, that was the perfect storm to go ahead and take out this phase line, and then it's going to be all systems go for a short. But that didn't happen, which is very, very interesting. Such a big fundamental event that didn't break down this trend line, which is ripe for a reversal. It's been active for so long. So that's very interesting and tells me this is a very powerful boundary. Something else from what I've been reading is that Boeing does a lot of business with China, and they would be hurt very significantly by tariffs being put back into place if there is not a trade agreement between Trump and China. Then Boeing stands to lose more than a lot of other companies because they do a lot of business with China, from what I have been reading. And so that is something that has been very interesting. As we're testing this phase line, I've been thinking, man, if Trump and China come to a deal while this price is very near the phase line, then the vice versa would be true, in the sense that a deal between the two countries would be extremely bullish for Boeing, more so than other companies that don't have as much exposure to doing business in China. So potentially that could be the next major fundamental factor that causes this thing to either hold support here and go on the next huge leg up, or finally break this thing down and enter the 5th, 6th, and 7th phases of the hyperwave. So that is my analysis, just using hyperwave, not using anything else. What are you seeing, Tyler? Anything that you want to take a look at?
Well, that's great. We've always said that one of the best ways to use hyperwaves is using other techniques along with it for entry and exit points. Sometimes stop and reverses are very helpful. Sometimes Consentio is very helpful. But if you just pull that back up for a second, we can see a very clear Celgene sell signal on that chart. And what's interesting about that, I think there's actually a 7 in there. You've got to hunt for it a little bit, but we can actually construct the stops on that, which I think would be fun to do on air for those that didn't watch our webinar, which is still available to anyone by going to our website. It's approximately 4 hours long. It's $150, but I think you'll find it very useful. And one of the things we're doing here with this construction is we are helping us to get an understanding of what might be happening with this price action as it gets closer and closer to maybe breaking down the phase 4 hyperwave line. And those that have followed hyperwave know that what follows that is not pretty. It's a crash followed by an up move that will not get back up to the top, and then a very long, prolonged bear market. So all of the marbles are on the table here, and to the extent that we can use other techniques, let's see, what do we have here? We're looking at a $10 increment with this particular chart. And if we expand it out, it's still a $10 increment. So that's good. So what happens when you get a 5 or a 7, this is actually called a Celgene prime. A 5 is all you need for a top. And you see off that last 5, a tremendous drop. We dropped off the last 5 from almost $400 down to $300. So a 25% drop. We've got another 25% drop off of this 7. So in both cases, once again, the Celgene system was warning that something wicked this way comes. Now, the way you basically construct stops is you give it a 5-week period to figure out what the heck it's doing after the final top. And you do that on TradingView or on graph paper relative to the size of your chart and the size of your monitor. In this case, as you see on the right, there's a $10 increment between all the price action. So we go $10 above the peak, and we run that over for a 5-week period. And then we drop it by 1 increment every week that goes by. And those are stops. So what will happen, just like within a parabolic stop and reverse, an SAR, they will continue to move down in a downtrend after a peak or up in an uptrend after a bottom until the price finally is forced to hit it and get you out of the trade, even though you don't want out of the trade. What's happening here is because you've also got a hyperwave phase 4 line, the purple line coming up. If we drop below that, we are going to drop very, very sharply. But because we've got a 7 coming down, what we're going to see at some point with an up move will be you will get out of the short trade from the very top. And you will get back into a long trade at the point that stop is taken out. Now, I'm just eyeballing it here, but it appears to be very interesting as you see these stops being placed. And what's interesting is that we are going to squeeze the price in between the descending stop and reverse points, or in this case, the Celgene stops, and the price itself. And the Hyperwave phase 4 line. So we've got some people in Telegram that follow Hyperwave, and a number of them are very interested in Boeing. So I'm glad that Socrates decided to pull this one up. You can see that what's going on these descending stops. What's nice about this is sometimes when you put a stop in a trade to protect yourself, you have to keep changing that stop as the price goes in your direction, because you want to save as much as the profit as you can. Notice as Socrates is drawing this in, that you are going to be able to take out almost the entire trade from the top using the Celgene system, even before you get down to the critical decision making off of this phase 4 line. So a lot going on here. And one of the important things that I wanted to point out is not being married only to a system or only to a belief, a fundamental or technical belief, but use as many of the tools at your disposal as you can to make your decisions. So this is going to be very exciting as we go into the end of this week and next week to see where this closes. And then all of the information that Socrates just gave you about ways of looking at the fractals and all of the rest of it. We could even throw Consensio on here, but I think that's overkill. So unless you've got anything else on Boeing, I think we can move on to taking a look at a currency.
Yeah, just we'll kind of summarize what we went through there. Might have been a little confusing for listeners, especially their first time learning about Celgene, and just want to go over the stop loss here that was set. We put it $10 above the peak of 7, which was 446. It's $10 above that peak because that's the increment that this chart goes by. And again, that will vary based on zoom and based on monitor size. So there are some details that we're working out. This system was developed long before TradingView, back when charts were mostly done by hand on graph paper. So that is one area that we are still working on. But essentially, you can see how this works is for 5 weeks. This is your stop loss. And that is one increment above the high that was the 7. And that goes out for 5 weeks. Anytime in the first 5 weeks you close above this line, then you're stopped out. After the 5th week, the stop starts trailing, and it trails by 1 increment per week. The increment is $10. So every week, this stop comes down $10, and it gets extended for 1 week. So if during this week, right here, when the price is under this stop, if you close above that price, you're stopped out. As you can see, we were never really in danger of getting stopped out until the recent action. Right in here, we notice that price came and exceeded it, but look how it closed below it. So you're not stopped out. You progress the stop 1 more increment down, and you wait for the close. Stop has moved down to 346, and we do end up closing above that right here at 353. That's where you're stopped out. And where did you enter? You would have entered right here. That is because this is the high in between a lower high and a lower high. It's essentially very similar to a fractal, except you only need 3 candles instead of 5. So once this closed right here, you had a short entry signaled by Celgene at 422. Your stop would have been at 456. So that's what about a $5% risk. And then you would have been stopped out at about 357. So what is that? Well, it's almost 20%. So you're looking something like 3.5 to 1 on the what you ended up getting in terms of risk reward. That's not always going to be the case, but you do see that one did work well. Same thing could have happened here on 5. This is a 5, a 6, or a 7 is a tradable event. So short signaled here. And on 6, a long was signaled right here. So if you're trading Boeing using Celgene, you would have been doing very, very well over this recent price action. Longing here would have taken advantage of almost all this move, and then shorting here does the same thing, taking advantage of almost all of this move. So that's a great catch. I didn't even notice that, and seeing a broadening top occur at this phase line test while it is overextended, that is very, very interesting and something that is worth paying very close attention to as far as I'm concerned. So,
terrific. Thank you. That helps clarify, I think, for some people how it works. There's a bunch of rules and all of that sort of thing, but that's for a different day. Okay, terrific. Now here's this really interesting Turkish Lira chart that Socrates has been talking for a long time, as have been a number of our other clients, and it's been very difficult to play, but I'll turn it over to Socrates to see how he's analyzing this.
Yeah, absolutely. I have been looking at this as a buying opportunity over the last about week or so, and that is due to retesting this phase 3 line here. And as I originally said, I don't like to just buy phase line retest while the price is just falling right towards it and it's in danger of breaking down. I like waiting for further confirmation or other signals, but I actually was comfortable buying in this area due to prior areas of horizontal support. I've been following this thing closely, and I felt very comfortable in the support at the 560 to 580 area. So that was a situation where I didn't wait for as much confirmation as I usually like to. Instead, I was looking for the horizontal areas of support that matched up with my phase line to provide a high probability entry. So there was one more that I was looking at. Where was that? That would be right about here. Okay, so those were kind of the areas that I had drawn out for horizontal support. Had basically, I wasn't even very confident that we would return all the way to the phase 3. Once we pulled back to this area at 585, I saw a lot of support there. So I was actually going ahead and starting to buy in right in here. And then as we pulled back, as I like to do, I add, which improves my cost basis. And that was the game plan all along. Was when we fell to here, I saw a lot of support and I wanted to start building. I started very small, maybe like 15% of X, maybe 20%. And then as we fell to this next area, I was ready to enter another percentage, something like 30%. And then entered another something like 30% here. Didn't end up putting the full 100% of X in because wanted to wait for further confirmation to really get fully entered. But that was essentially the game plan, is something like 30%, 30%, and 15% at each of those areas. So this one did look like it took right off pretty much after we were looking at it. And so the Hyperwave is all about the weekly chart, and it really only cares about weekly in terms of that is how you're waiting for weekly closes in general to identify entries or exits. So for me, I absolutely only use the weekly closes for my stop losses and for my exits. So right now, my stop loss, I don't have a stop loss on the books. Instead, I'm just watching closely. And if a weekly candle closes below this phase line, then I'll be manually exiting right away. So I am basically looking at on the other end of the spectrum for entries. I don't really like waiting for weekly candles to signal my entries. I like zooming in for entries, and I really like the 4-hour chart, as you guys have started to see. So when looking at the stop loss, I am using weekly candles and weekly closes, but when looking at buying, I'm almost never using the weekly candles. I'm always zooming in. We'll first go into the daily, and then we'll take a look at the 4-hour. So the daily, what do we see? We see a beautiful fractal after the trend line retest, which is an entry that I very much like. So hopefully you guys are able to start seeing the fractal without even needing the indicator pulled up. Right here, we have a low, higher low on either side, 2 candles on either side. So that gives us a down fractal after a trend line retest. We see how well that worked back in here. We got one right before, but it didn't retest the trend line. Right here, we test the trend line, get a fractal, worked out brilliantly. Right here, fractal after testing the trend line worked out brilliantly. So that is a signal that I definitely like, and we'll not necessarily wait for a weekly to show it. Just seeing it on the daily or the 4-hour is something that is enough for me to really pique my interest. So we see that fractal there on the daily. We got a same sort of situation here on the 4-hour, basically at the same price. So this was something that I just loved seeing a long wick below a trend line or a phase line with a close above. That's a dragonfly doji. Seeing that after a sell-off at support is something that I just absolutely love. The other thing that I will keep an eye on that I don't know if we'll be able to here, we can, is volume. What I love more than almost anything else is a high volume dragonfly. So we didn't really get that here. Let's take a look at the daily to see if maybe that paints a different picture. It doesn't. So when I see a volume spike combined with a dragonfly doji, to me that's a huge signal, and is my single most reliable signal for a reversal is a high volume dragonfly doji or a hammer, either one. So seeing that, I instantly want to throw on volume. We don't see a big volume spike. I want to see a big selling volume spike. We didn't see it. Oh well, no big deal. Still getting the dragonfly at the trend line, which is something I really like. So we did, last time we looked at this was right around here, and I was suggesting, I wasn't suggesting, I was just talking about that I am viewing this as a buying opportunity for myself with my own money, and it started off nicely. It seemed to rebound very quickly, and it started to take off nicely. But now it's starting to kind of get a stutter step and is falling back towards the phase line. So I thought this was an important one to take a look at. Anybody that saw our last video probably saw it taken off and now is wondering what's going on. So now I'm going to be wanting to use my other tools and going to pull up some moving averages and look at a trend line there, and pull up my moving averages here. Okay, so right here we have fallen through the 4-hour. The 4-hour did get a death cross, but the price was not close to it. The price was significantly extended below, and therefore this I wouldn't be viewing as a sell signal, but it would be something that's very important to me, signaling that the short-term trend is changing. And this is something that I would want to see reverse very quickly. So this is interesting to see that the short-term trend is changing, and that really is just kind of what you would expect after seeing this thing went from 620 down to 570, and it did that in about a month. So if if the price is selling off for a month and your short-term trend is still bullish, there's probably a problem there. So that is where it's very important to understand how the short and the medium-term trends need to work together. If the medium and the long-term trend are bullish and the short is bearish, it's often a great buying opportunity. If the medium and the long term are bullish, but the short term is bearish, that is a dip. That's a dip in a bull market. And I like buying dips in bull markets. So I have to understand that when I'm doing that, I will often be going against my short term trend, which is something that I don't really like doing, but have to get comfortable with it, essentially. And how I do that is by zooming out and applying the same rules to different time frames. So the 12-hour is very interesting to me in the sense that this 200 EMA is moving right along the phase line, and that is something that I love seeing. This kind of, it's like a snake slithering along in and out, making almost like a sine wave above and below this phase line. To me, that's like a huge area of support when you see a phase line or a trend line with a moving average wrapped around it. That's a big confluence of support that is very important to me. So betting against the 4-hour chart for me is okay because the price was extended from the death cross and it was finding support from moving averages on higher time frames. We get a dragonfly doji that got us right back above that 200 EMA. And now when that happens, my price target is that 50, which it could take some time. This could continue trending down. But right now, based on the 12-hour chart, I would be expecting this to return to the 50 right about in there at 586 or so. And what I would love to see, this isn't a prediction, this is just what I would love to see. I am long and I might be adding more if what I love to see happens. Like I said, there's still about 20-25% of the X that I'm waiting to enter until I have all the confirmation that I want. So what I'd like to see is a bounce into the 50, a pullback to retest the phase line that will be in line with this horizontal at 575, which would be in line with the 200 EMA. If that creates a higher low right there, that would be a very interesting buying opportunity and would lead me to believe that we're going to break through that trend line on some action like that. So again, that's not a prediction. That's just what I would really like to see, being that I am a buyer of this dip. So zooming out just a little bit more and seeing big support from the daily as well. The 50 and the 200 have a bullish cross. The 200 is trending up. And what's most important to me is the divergence between the two. When there's this spread, when the 50 has spread out significantly from the 200, that tells me that anything between the 50 and the 200 is a great buying opportunity. The wider this is gapped out, the more I view that as support, the more I am wanting to buy when the price falls in between there. Anybody that likes using the Ichimoku cloud, I kind of visualize this as a thick cloud, a thick Ichimoku cloud that if the price falls in there, it should be, the thicker it is, the more it should act as support, the more established support should be there. So the wider that these are spread out is kind of like saying that seeing a thick cloud, just in my mind, how I think of it. And based on Consensio, the further that these are spread out, the stronger the trend is. Tyler talks about waiting for a trend to prove itself. And when we're back in here, we've got what is looking like an unproven trend, and see the pattern of testing the 200, going to the 50, coming back to the 200, and then taking off. So seeing that right there, that's action that I love seeing, but it's not necessarily a proven trend. These MAs are converging, they're squeezing, and that means that this price could really go either way. And when it does, it should do so in a big way. So again, that's kind of where Tyler and I differ a little bit. He likes to wait for proven trends to enter. He likes to wait for the highest probability, whereas I look for the best risk reward in this sort of area. But once I do see the price move out and confirm and show a proven trend by these now spreading out, that's something that tells me that buying pullbacks is going to be a good option, as long as those are in such a bullish posture and we have confirmation from a hyperwave with the price above the phase 3 trend line. Hyperwave says buy and phase 3 retests are the best places to enter, and that's due to risk reward and probability. So anytime you get a really good risk reward and a high probability, that's something that I want to be jumping on big and betting bigger than if I just have one of the two. So that's my analysis for the Lira. What do you got for us, Tyler?
That's fantastic. I love all of that. I think what we will do is I will jump on screen share and kind of reverse what we looked at Boeing. We talked yesterday and the day before a little bit about the S&P, and mainly what was interesting to me was that we had this gigantic Celgene broadening top. Can you see that okay?
Yep.
Okay, I'm going to pull the S&P up. And for those of you that saw what we were talking about yesterday, and those that just saw the Boeing, a broadening top is just a megaphone that keeps getting bigger in both directions. So you have highs above highs above highs and lows below lows, and that gives you your basic pattern. There's rules about what works and what doesn't work, but we went into that yesterday on the S&P, and I'll just quickly show the Nasdaq, same sort of a formation, and the Nasdaq 100, same sort of a formation. Didn't quite make it on the composite, but it did on the Nasdaq 100. So relating that to Boeing, I've been wondering for some time now if we are talking about an enormous, one of the biggest I've ever seen, hyperwave. And we've had a number of discussions about this. To me, this was a hyperwave that came all the way back down to the phase 2 and held and didn't get back up, and then came back to the phase 2 again before taking off at this unbelievable angle, which to me is a pretty darn good phase 3 angle. And these aren't perfect. And when our book comes out, you'll see many, many examples that are not archetypical. In other words, they're not perfect, but they all have the essence of hyperwaves in them. It's very difficult for anyone, even though you don't study hyperwaves, to argue that all of these retests of this trend line aren't significant. And notice that we're talking about from 2009 all the way up to 2016, 7 years of repeated testing of a trend line with no closes below that trend line, which happens to be hyperwave talk, and really not so much trend line talk. But so here you have a traditional hyperwave that ran up to 5,000 and then all the way back down on its breaking lows to $600, but didn't make it all the way back down to a phase 1. And then we go and test that again years later from 2002 all the way out to 2009, 7 years, and then another test of this line. Then we go into this 7-year phase 3, and the question now for hyperwave lovers and those concerned about the future of the US economy and stock market, we are debating, is this a phase 4, and has it subsequently broken? And the answer appears to be, if this was a phase 4, then how in the world did we go higher than the original peak, which we call a phase 4 peak, into a phase 5 and up into a phase 6? So the next thing you have to consider is consensio, because we've got some questions here about what's really going on. Now I've got my 2, 7, and 30 up. I'm going to take the price off very quickly just so you can understand what is going on in consensio language. And you've got the you've got the long-term 30-week moving average totally unaffected by all of this nonsense going on up here. It's still fully bullish, even though price is broken down below the intermediate term and the short term has moved below it. Notice that the intermediate term is still moving up. So from a consensio point of view, I stand back and I say, okay, I'm not sure what's going on with Hyperwave, but consensio is saying, don't get flustered. This is still in a very bullish posture. Okay, I'm going to put the price back on just so we don't get lost with all the numbers. And what we see is that from another system's point of view, which is the sequential, we did get a sequential weekly 9. The 1 to 4 week pullback gets negated with these closes above a 9, but still we do roll over and we get 1, 2, 3, 4 red candles that break what might have been a phase 4 trend line. Maybe we need to draw that phase 4 trend line now at a less steep angle, because we now have the evidence that we went higher than what would have been the top of a phase 4 here. And maybe we are reestablishing a phase 4 that is significantly more angular than the phase 3 line. And maybe that's all that's going on. Or we've got the ability to come all the way back down to this phase 3 line, and we never had a phase 4 at all. So this is a very confusing picture with one of the largest stock market in the world, and one of the biggest indexes in that stock market that is being propelled up by technology stocks that themselves have run into a lot of trouble. So a number of very interesting things. A Celgene top, which happens to be a 7, which is called a Celgene prime. And from this top, you go over 5 weeks, just like Socrates showed you. This is a monthly chart. Let me go back to the weekly.
Before you do that,
yeah,
I guess, and I might be sidestepping a little bit, but I just found it fascinating how well that 30 moving average is working on the monthly chart. I mean, that thing has just picked pretty much every bottom. We failed to close below it for years. And I didn't realize how significant of a boundary that was. Anytime I see a moving average being that resilient and being tested that often, that's something that's really important to me, and that jumps out at me in a big way, seeing the recent wicks off of that line since 2015 and the failure to close below. I found that fascinating.
Yeah, that's a great observation. And also your you're liking the fact that on phase lines, when you get moving averages moving right along with them or parallel to them, that gives you extra evidence of how strong the support really is. And we can see here, as price did drop down sharply and actually broke that 30-week trend line on the second red candle here. The first one just wicked down to it. The second one wicked below it and came right down to the phase line, which, again, it's mysterious. I understand that. But just take a look at how that phase line construction keeps all of this price action above it with a number of wicks. Even on the monthly chart, we use weekly for making decisions, but the same thing goes there, going all the way back on that chart. So on the weekly chart now, we have had a lot more destruction in terms of the weekly moving averages. But even on this weekly, we have come down to it and then had this tremendous wick below it last week. Reversed, we're still on a red countdown, but we are on a green 9 in the opposite direction from previous 9s. So a lot going on in not only the S&P, but the Nasdaq and the Nasdaq 100, where we have a confluence of not only potential hyperwave signals, but questions about those signals, no questions about the Celgene signals, and some confirmation in consensio that everything is still all right. Any other observations you'd like to make on any of that?
Yeah, one observation that's specifically for the S&P, but we can check on the NASDAQ while we've got that up, and that is the weekly Parabolic SAR. Could you throw that guy on?
Sure.
It's fascinating right now in the S&P, and I'm inclined to think that it probably is on this too. Are we wicking right off of it?
Right there.
Yep, that's just what's happening in the S&P. Have showed a few times on a few different charts how that wick will come right up to it. And I mean, all you have to do is wick through that SAR. You don't have to close to take it out. So that thing was like pennies away from taking out the SAR. And instead of that happening, it gets a sharp reaction back to the downside. While the medium term moving average is, the short term is trying to cross the medium term. So to me, the whole story is that right there is really
that's a great observation. And because of that, I'll pull the S&P up and see what we've got there. And there it is.
Right there. So, and then the S&P is even a little more bullish, having gotten the short crossing the medium, and the medium doesn't have as bearish of an angle to it. So that is interesting. So right there, seeing that short crossing the medium, that could be a buy signal, but I would wait, and I would wait for the SAR to be taken out as a confirmation. And I really, really like the weekly SARs. Because in my experience, it's a very great combination of I talk about usually you're either picking risk reward or waiting for confirmation. And the Parabolic SAR, I think, is like the best combination of that, in the sense that if you're waiting for a weekly Parabolic SAR to break, then you're very early on in the reversal, and it'll signal reversals very early on. Which will provide very good risk reward, but it won't signal them so early that it's a very low probability that it will work out. It seems to have an uncanny way to wait for just the right amount of confirmation. So there's, think of a spectrum. On one end is the trades that have the best risk reward. On the other is the ones that have the highest probability. And the Parabolic SAR, to me, it's the right in the middle. It has both, and it waits for just enough confirmation for the risk reward to be very appealing, and it also is waiting for enough of a sign of a reversal such that it is going to provide a pretty good probability. Take a look at and I'm not talking to you, Tyler, I'm talking to the viewers. Take a look at Bitcoin and the weekly Parabolic SAR on Bitcoin. If you just traded the weekly Parabolic SAR on Bitcoin, you have beaten the market so bad over the last couple of years that it's not even funny. It didn't signal the exact bottom breaking through the weekly Parabolic SAR, but it sure came very darn close, which is a great illustration of what I mean by it's waiting for just enough confirmation that it provides very high probability setups, but it's also not waiting too long such that you have like the moving averages to roll over. That's waiting for a while, and that's going to miss 15-20% of the bottom almost every time. That's what it's designed for. Whereas the Parabolic SAR is going to signal much sooner than that, and also provide very high probability setups. So seeing that, using that as a buy signal, got you in at 46, 4,700, something like that. And now we see that it has stayed bullish this whole time, and we continue to support above it. So you got in and you stayed in using the Parabolic SAR. Since you got it pulled up, why don't we go ahead and zoom out and see how well it worked in 2017 and 2018. So notice 2017, that thing stayed, and this is when I really started paying very close attention to the SAR, is it was one of the best ways to trade Bitcoin in 2017. It stayed bullish, and it continued progressing along as the price was going parabolic. The Parabolic SAR, as it gets its name, was going that way as well, was skyrocketing, such that the trailing stop loss, it didn't get triggered until the very top. That candle, which was that he's pointing at now, the green 3, that's the top, and that candle was the first actual reversal from the top, and that first reversal from the top took out the Parabolic SAR and took it out, well above 12,000, and had signaled an entry back in July of 2017 when the price was breaking through 6,000. So right there, that green 3 above the green 2, bam, there's your entry, just using the Parabolic SAR. Maybe you confirmed with TD, but I'm talking about we're just using this Parabolic SAR to trade Bitcoin. Signaled your entry there in July at a little above 6,000 and kept you in until well above 12K. It would have gotten you in well before that as well, but just keeping it short. And then look at the, if you were to short as soon as that bullish SAR broke down, look at how well those bearish SARs held all the way through. We bounced and we touched it right there on that green 4. I mean, just kissed it. Unbelievable. And it stayed intact all the way down to support. So just using the weekly Parabolic SAR is a very powerful tool and something that I pay very close attention to. So seeing that the S&P and the Nasdaq are wicking down from the weekly SARs is the single most important thing for me right now. If we break through, that gives us a buy signal, and that's something that I have a very hard time discounting based on the risk reward that it will generally provide and the probability of success that I have grown to believe it to work out. So on the other hand, if we do stay below that area on the S&P, then that's will continue to be the most important thing to me. And as we see it approaching the lows on Bitcoin, that is something to pay very close attention to. Over the last couple weeks, everybody's been wondering, is this just a small dip, a minor correction before more up, or are we going to really have a major correction down to 62? We're coming off of a green 9. We're coming off of a bit of a hanging man, a bit of a reversal doji. We're at resistance from the TDST, the setup trend line. There's a lot of reasons to think that we're due for a major correction. But if you're just using the Parabolic SAR, you're not worried. You're not thinking about it at all. It's just simple. It's like, here's the number. As long as we're above that number, then we're staying bullish, and we're just viewing this as a small short-term correction. As long as we stay above that SAR, then we're staying bullish and just viewing this as a small correction. Whereas if we're not using the weekly SAR, there's a lot of different reasons why we may be expecting a big correction or may not. So that SAR is just so simple and so reliable that seeing it right above the S&P and the NDX is very important to me. Seeing it right below Bitcoin is also very important to me. So I appreciate you pulling that up.
Well, and it's very interesting on Bitcoin. We said we're going to spend some time on Bitcoin, and that's what we're really doing right now. But the bearish case can be built with these stop and reverse points, because what you are seeing, you can predict where the next one's going to be next week. This is the week of June the 10th. And so next week is going to be June the 17th. And that stop and reverse point is going to be somewhere around 82.50. And what that means is, remember, on a stop and reverse, all you've got to do is wick down to it. We're trading at 81.21 right now. So by Sunday, we're going to get a new candle developing. Or if we drop down right now, slightly below the 8,000 level, we will get a reversal on this. So we're getting squeezed in a number of ways, not only this old phase 2 trend line that we did get above, but then got rejected. Now we're struggling to get back to it. We've got a price flip going on from a green to a red one, even though we're on a green candle. But we've also got these other things going on. So not making any calls, there's no need to make any calls. What we're trying to show today in this past hour is that just taking a look at 3 or 4 major charts that are telling you that if you use a number of these different techniques, it greatly reduces the questions in your mind, or your confidence or lack of confidence in what's happening, because you've got answers. You don't know what's going to happen, but you can tell that critical things are building, and you can identify those critical things and then take advantage of it to limit risk or to increase your risk reward opportunity, the way Socrates likes to trade it. So with that, that's enough for me. Do you have anything else you'd like to add?
I could just give a quick update on the 4-hour chart.
Great. I will get out of this and get out of this. Okay.
And I will make this quick. We're already at an hour, but there have been some interesting developments since yesterday. And so I do want to take a quick look. So yesterday we were looking at right here as a crucial area. Both Tyler and I thought that if we were to break down below here and come and retest this 76, that it would no longer hold up as support. Tyler probably has his own reasons. The reasons why I thought that is because 3 tests of this long-term moving average is the most that I like to see. And it's a really good number. Like I like seeing 3 tests, but I don't like seeing more. And I like seeing 3 more than 2. So when we got the second test here, bounced into the 50, and then got this third test here, now that is what told me when we have 3 tests. No, son of a gun, forgot to click on my screen share. Okay. That should do it now. Okay, so we were looking at this as the crucial area of support that Tyler and I did not want to see the price break down below. And I was feeling that way for a couple reasons. One, we had 3 tests of this 200 EMA, and I expect it to hold for support 3 times. I do not expect it to hold for support a 4th time. And when we get this 3rd test, that's when I start looking for Wyckoff patterns. Wyckoffs generally have like 3 kind of like a up, down sort of action where it's sideways and has at least 3 tests of support. So when that happens, now I'm on red alert for a Wyckoff, and that also happens to be the best time to start looking for Wyckoffs based on the theory as I understand it, because after this test here, which will often be a spring if it falls below these areas, that would be a spring and a bear trap. Since that didn't happen, it's just a test and it is a signal of strength since we created a higher low. After this signal of strength is where things get really interesting and important. And what you want to see is a higher low develop as a second signal of strength. And this right here is point number 12 on schematic number 1 of Wyckoff accumulation. Point number 12 is where Wyckoff says is the best time to enter long exposure and make sure that all of your shorts are covered. Is point number 12, this higher low, which follows the test here. So that is where I get really interested in Wyckoff accumulations. We have this higher low after support has held, and now it looks like resistance is ready to break down. So I was looking at areas of confirmation using fractals and saying that if we break above this price at any time, don't need to close. If we just break above that, then that could be an area to buy. And I mentioned that I didn't buy here because I had bought back in here, and I was preferring to wait for a break of this market structure before adding. I don't like entering too much at the same price. Buying here is the same price as buying here. Since I already bought it, I don't want to buy it again. I want it to move in my favor before I'm really interested in adding. So that's what I was looking at, is a breakthrough of this fractal here, and we did break through it up on this candle. I started getting a bunch of messages and tweets on Twitter asking, okay, we just went through there. Is it time to buy? Can I buy? Can I buy? And I told everybody to go figure it out for themselves. And but for me, I am definitely intrigued with that action and will be watching closely. And what would I be watching for closely after this? Anybody that's following along should see what would be important to me next, and that is this 9MA. It was still below the 50, so watching for it to get across with the 50MA was the next thing that I was watching for. And basically, if we were able to get this cross with the price somewhere near it, then I was going to be looking to add to my position. I was going to consider that a break of this market structure. I was going to consider taking out this fractal and crossing here as the confirmation that I needed to go ahead and add. So I did at the 8,000 area, went ahead and added there. And now we've got point number 13 of the Wyckoff accumulation, which is the break. And now we watch for point number 14, which is where Wyckoff would be interested in adding, and I fully agree. So first we get this signal of strength. Higher low is the first area where he wants to buy and make sure all shorts are covered. And then if we break through resistance and throw back to retest it for support, then that gives us point number 14, which I believe is the final point. It's the final point that matters because that's the final area to add or enter into long exposure. So if I missed, or if anybody else missed 8,000, this entry here, the next thing that I would be looking at is a pullback to, and I actually do have an order set to continue to increase my exposure at 80.20 is the number, which is going to be a retest of this area here. And what also interests me is a new trend line developing right there. So that is what I am looking at. I really like entering in pieces. There's no reason why I shouldn't have just entered the full exposure here, but I just like waiting and entering in pieces and waiting for more confirmation. If we pull back here and support 80.20, that's a much higher probability entry than it was here in my mind. So I just, instead of entering it all here, I like to wait for that market to continue progressing in a way that I understand, or at least that makes sense to me. So now I am looking at a new potential bullish channel that is developing with this higher low that was the signal of strength here, and this higher high here. So that is going to be in line with the area of support that I have identified here. So if price does, again, this isn't necessarily a prediction, and it wouldn't be a bold one even if it was, but if price does meander back towards about 80.30 in the next 1, 2, 3, 4, 16 to 20 hours, basically in the next 16 to 20 hours, if we are at 80.50 to 80.20, then that's something that I will be very interested in as an opportunity to continue increasing long exposure. And that would be based on seeing this 50 should start rolling up, and it should be in confluence with this trend line, with this horizontal. Anytime I have all of my favorite indicators pointing towards the same thing or all lining up at the same area of support, that's something that I generally do not want to pass up on. So that's what I will be looking at. If that does happen, then I will expect a new swing high. We'll just go ahead and use this action here to determine how that would look. And sure enough, that would get us back to the top of that channel, which would be right in line with this horizontal resistance that we see established here, right at 85.57, 85.50 or so. So that would be very interesting spot to start taking some profit for this position. So that's what I'm looking at, and hopefully we see this 50 roll up and price continue to support above 80.30. If it does fall back below this 50 EMA on the 4-hour chart, I'm going to be completely changing my tune, and that's again why I like entering in this area, because if I want to exit, it should be very close. Like if we just break down to 79 or so, then that's going to start rolling over. Everything's going to start changing in my mind, and that isn't far away from the prices that I'm entering at. So that's where the risk reward is what's so important to me. As long as I have a small amount of risk and a high amount of reward, I don't need to be right that often, and I can just go ahead and basically throw some eggs at the wall, and that's how I do it. So that's my analysis. If you don't have anything to add, we can wrap this up.
Terrific. That's great analysis, and I'm hoping to get to a point where I can exit the rest of the positions we put on, but this is a start, and we'll see what happens. Thank you very much, Socrates. Thank you, everybody.
Excellent. Thank you. I appreciate you having me on. It was a pleasure to look at some charts with you, and I will be excited to see how those hyperwaves develop and what happens with Bitcoin.
Yep, exciting times. Thank you, everybody.
Bye.